Who doesn't want free money? In this video, I'm going to show you the closest thing to it and exactly how to get it, unless you don't want it. Hey, look, I know you might be skeptical. So was I before learning this strategy, especially if you're just buying stocks and hoping to go up over time. In this video, I'm going to show you my strategy for making passive income, how to enter trades at a lower price than the current market price, how to close out trades at a higher than market price so that we can continually collect passive income on a weekly or monthly basis, and how to make this happen, showing you real examples on the option trading platform. And finally, at the end of this video, I'm going to show you how I consistently create passive income in my stock options trading portfolio. Hey guys, Darren here. All right. Hey, I promise we're going to dig into some deep option trading tips and tricks. So if you haven't subscribed already, please do that now down below. All right, I'll wait. Hey, for me, it's super important that I'm using options to create a consistent flow of passive income. Before we get into that though, please download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. What is my strategy for creating passive income? Guys, the first thing that we need to understand is the difference between buying and selling options. Along with that, we need to understand that they're exact opposites. Great observation, Darren. When you buy options, you pay a premium for the option. When you sell options, you collect a premium. Upon placing the trade, the money from the buyer of the option immediately goes to the seller's account right upon the trade placement. Now, the buyer and the seller are betting on the same trade, so only one can win. If the option expires in the money, the buyer wins. If it expires out of the money, the seller wins. Now, here's the interesting part. The percentage of winners between buyers and sellers is definitely not equal. This is because most of the options expire out of the money and end up being worthless. Now, this doesn't take into account closing the option early and taking profits along the way. The point is, you have a higher chance of winning the trades if you're on the side of selling the options as opposed to buying them. Because, well, math. If you've tried buying options and you've noticed that you've been losing money, that's because the seller has been collecting that free money and laughing all the way to the bank. Let's jump into an option chain on the Tastytrade platform. It's the one I use and it's the best platform out there for trading options. I'll put a link down below. Right now, you can get up to $2,000 when opening an account. Let's punch in the ticker CRM for Salesforce and look at the option chain. We go out to the June option chain since it's about 1 month out. We click on it and open it up. Let's look at selling the 185 strike put option by clicking on the bid. We see the mid price is $3.10, so that is $310 that we collect up front as the seller when we place the trade, since one option contract controls 100 shares of stock. We see this trade has an 89% pop, which stands for probability of profit. If we flip to the curve mode by clicking on curve in the upper left, we see the profit zone in green. To calculate the actual break even, we take the 185 strike price and subtract $3.10 in premium collected, and we see that the break even is $181.90. Since the current price is $201.77, it would take a 10% drop in just the next 33 days before we started to lose a penny. Now, if we hit swap, it flips the trade to buying the option instead of selling it. So here we pay $310 and we have just an 11% chance of profiting. So would you rather sell the option and have an 89% chance of winning, or buy it and have just an 11% chance? No brainer, right? So you can see that your option trading platform takes all the guesswork out of the trading because it's right there on your computer screen. We follow the numbers, we follow the percentages, and we'll be successful. Moving on to the next part of this strategy, the different ways to profit selling options. There are really two parts, selling puts and selling calls. And of course, there are combinations of these two with spreads and iron condors and other fancy trades. But basically, they all come down to some combination of selling puts and calls. Let's review the definitions. Selling puts gives the seller the obligation to purchase stock at the agreed strike price if that option expires in the money and the option is exercised. So when we sell put options for income, we don't want the stock price to drop below that short strike price. Otherwise, we'll have to buy 100 shares of stock. Selling calls gives the seller the obligation to sell stock at the agreed strike price if that option expires in the money and the option is exercised. So when we sell call options, we do not want the stock price to exceed the short call strike, or we will likely have to sell 100 shares of the underlying stock. If the stock price doesn't drop below that short strike price, then we get to keep the entire option premium that we collected up front. Now, prior to selling options, your broker is going to require that you have the collateral necessary to cover your option contracts in case they are exercised. So you need to either have 100 shares of the stock or the cash in your account to cover 100 shares of the stock that you may have to buy or sell. Makes sense, right? I mean, this isn't the mob where they just come and break your legs if you don't pay your debt. Now, when you sell these put and call options, you will need to close out your position by buying back that contract at some point prior to expiration. Or the best case scenario is that they expire worthless and you keep the entire premium. All right, let's look at another trade. This time we punch in KRE, and this is a regional bank ETF. The banks are under a little pressure right now, and as you can see, the implied volatility is high at 43. This is good for us because we collect more premium. KRE is a basket of bank stocks, so it should be pretty safe as well. We open up the June option chain as it is about 1 month out. We click on the 33 strike bid and see that we collect $102 and have to put up $1,125 to place the trade. So that's a 102 divided by 1125 or 9% monthly ROI or return on investment. So that's a 100% ROI annualized, which is incredible. We see the trade has a 69% probability of profit. So since we're selling and not buying, we're on the right side of the math. Now, I'll keep selling this put option until the stock drops to the strike price and I'm assigned, if it ever does. Otherwise, I just keep collecting the passive income. Month after month after month. Once assigned, what do? Twiddle our thumbs? No, we sell a call option and we collect more passive income. So we click on the bid on the 39 call option and we collect $108 for selling this option. 108 on 1196 is again a 9% monthly return on investment. So we're doubling our money with a 100% annualized ROI. Wow, it's amazing what you can do with options. We still have an 81% probability of profit when selling this call option. I rinse and repeat month after month, selling puts if I don't own the stock and collecting passive income. Then, when assigned and I own the stock, I sell calls and continue to collect passive income month after month after month. All right, guys, if you're a beginner and this sounded kind of confusing, don't worry. It did for me as well. We'll cover additional details on options in upcoming videos, and we'll learn together. All right, I put a link down below for the free options workshop. Be sure and grab that. And if you like the video, please just give that like button a little tap. Make sure you subscribe if you haven't already, and please leave a comment below. Let me know what you'd like to see going forward. I really appreciate it. Also, share with a friend, and I will see you in the next one. Thanks, guys.